Hello, and thank you for watching this demo of how to extract insurance pool information for an insurer using Salesforce as your client servicing platform. The information will be loaded onto the Hedge SPA platform to manage your asset liability profile. Even though we will break down the process for you in this demonstration, please note this process is fully automated. Our solution will allow your insurance company to do a few things: underwrite more competitive insurance products with more efficient ALM, cut out middleman costs, better manage your asset pools. When you have more than sufficient assets to back up against your liabilities, the excess can be booked as profits. Let's begin our exciting demonstration. Part 1 of this demo will be a demonstration of Salesforce as it relates to the Hedge SPA's proprietary technology. These steps are all done on the Salesforce platform, where we have stored insurance contracts for client servicing. The first example is a property and casualty contract specific to the Japanese marketplace, with specific information being stored such as policy coverage, policy duration, vehicle value, payment frequency for insured, and so on. As you can see, the Salesforce platform is entirely Japanese language compliant. This is another example of a term life contract. Once again, it is entirely customized in numerous sections to represent the actual fields that one would need to track in the database. Before we move on to the next section, here is one more example of an annuity contract. Again, this can be 100% customized to store the data required by your insurance company to characterize the contract. Salesforce is one of the most exciting platforms for insurance client servicing in Japan, which is why we are doing the demo on Salesforce. If you use a different platform, we simply have to extract the data from that platform. Part 2 lets us give you an example of how the pool information is transformed into a report that would amalgamate all of the annuity contracts inside the Salesforce platform. We can then export such a report, electing to export it as a CSV file. Having that downloaded onto our machines would allow for easy access by the Hedge SPA proprietary system. Do note that we are doing manual downloading to illustrate the steps. This can all be exported automatically using an API. We then process the insurance pool data by creating payout profiles based on actuarial assumptions. The exact data requirements will need to be worked on case by case, but here are some examples of the typical input data. Standard mortality assumptions in Japan, but users can customize the mortality tables if they need regional instead of national statistics. Surrender rate assumptions, maximum age assumptions. Existing assets being held against the liability pool. From these inputs, we can estimate the payout profile of the insurance policy pool and whether there are sufficient assets to protect against the liability pool. Finally, in Part 3, we will show you how our platform can recommend the best way to manage your assets based on capital adequacy calculations derived from a policy pool. Insurance companies and pensions gain access to asset liability management and direct estimates of policy pool liability profiles, as well as tail risk views with the confidence as high as 99.93%. The platform takes care of calculating capital adequacy ratios and cuts out middleman costs to help meet liability requirements in a low-yield environment. This is a simple example of what our powerful analytics can do for your insurance companies. Let us show you how to perform asset liability management for capital adequacy purposes. Let's select a sample life insurance portfolio. Our users can customize the actuarial assumptions on the liability side, such as mortality and premium tables. We can import this information directly from a policy pool database. Our system is capable of doing automatic rebalancing, including asset selection. We will rebalance our portfolio based on maximizing a capital adequacy calculation known as an SCR ratio. Then we select a set of shocks to stress the portfolio based on regulatory requirements and run portfolio rebalancing. The system tells you the adjustments you need to make to your portfolio to lower capital requirements. Our analytics can rebalance the life insurance portfolio in trouble back to health as soon as 2 quarters. To conclude, this solution is very friendly in that it automates most of the processes involved, starting from the insurance servicing pool. As illustrated, we conduct the demo on Salesforce, which is one of the most popular platforms for insurance servicing in Japan, and is fully Japanese language compliant. We can extract from any insurance pool database. On the asset management side, our solution is proven because our team at Hedge SPA has created large institutional profiles that manage to outperform its underlying index by 15% with no leverage in 4.5 months during the lockdown months. Don't take our word for it. This work was done for an asset manager tied to a top UK insurer. This is all because the pedigree of our solution is extremely credible. Our CEO built the award-winning multiple asset functionalities for BlackRock. Most of his clients were insurers, such as travel insurance or the second largest insurance company in the US. Our team is excited to work with you and hope that we can discuss a test case. Thank you for watching this demo.